Hello everyone and welcome back. In today's video, I'm going to show you how to bring Bitcoin onto Ethereum and then how to actually use that Bitcoin to generate a yield in DeFi. So before I show you how to get a yield on your Bitcoin on Ethereum and in DeFi in general, I do want to talk a bit about how to actually bridge your Bitcoin over to the Ethereum network. So there are a few ways to do that, but I would say the most secure right now is probably through Ren. Now the beauty of Ren is it's fully decentralized and permissionless, so you can send over assets from different chains and they automatically get sent to the destination chain, in this case Ethereum. So if you do decide to use the Ren bridge, and again this is something I've done many times and it's been flawless for me, basically you just click here, use Ren bridge, and then you can see here that you're now able to mint an asset onto the Ethereum network. You can see if you click send here, there's actually different assets you can send over to Ethereum, but I think most of you are probably going to be interested in Bitcoin. Now after that, you can choose the destination network. Of course, there's a few different options. So you can send it right onto Polygon, Ethereum, Avalanche, Phantom, and BSC. In this example, I'm going to use Ethereum, but I think many of you are probably interested in getting your Bitcoin on Polygon as well, so probably a great option there. So after you have that all selected, you simply just hit next. And basically this is just going to calculate the fees required to use the Ren protocol. So you can see for one Bitcoin, the fees total to about $140 or so. Now at the end here, you can see exactly how much you'll be receiving. Now it's very important here that you check this box basically to acknowledge that you're going to actually need Ethereum on the Ethereum address that you're sending this Bitcoin to. The reason being is after you send your Bitcoin to the Ren address, you're going to have to pull it out of the Ren network, and that costs a bit of Ethereum. So we'll just click here to view the BTC gateway address. And obviously this is extremely important, but that this deposit address is only active for 26 hours. Now it's really worth noting here that if you don't complete the transaction and you send to the deposit address after that time, there's a possibility that you could lose your funds. So just don't do it. Start the process over. Now after you read through that, you can hit continue. And basically it will give you an address to send your Bitcoin to. So essentially what happens here is you send your Bitcoin to this address, and then after about an hour or so, your recipient address is going to receive Ren BTC, which is essentially the equivalent of BTC itself. So after this is complete, you can then pull the Ren BTC out of the Ren network and then into your Ethereum wallet. Again, that is going to cost a bit of ETH. Now, just before I get into the yield opportunities, it is worth noting that you can actually release this Ren BTC back to the Bitcoin network. So if you don't want your Ren BTC on Ethereum, you can always send it back to the Bitcoin network. Of course, this will cost a bit of fees as well. So now that that's all squared away, let's talk about how you can actually get a yield on your Bitcoin in DeFi and specifically on Ethereum. So you may be familiar, there's a few different main Bitcoin type tokens on Ethereum. So there's Ren BTC, which we've been talking about. There's WBTC, which is a more centralized solution, but it's currently the largest solution by market cap. So a lot of people feel comfortable using WBTC, which is great. There's also SBTC, which is synthetic Bitcoin by Synthetics. This doesn't actually give you a claim to Bitcoin like Ren BTC or WBTC would. It's a synthetic asset that is meant to track the price of Bitcoin. And lastly, we have TBTC, which is another option that's similar to Ren BTC, but it's a little newer. I think they're still in their alpha stage, so I chose not to cover it specifically in this video. Now, this is all important to note because once you're on the Ethereum network with your Ren BTC, you can convert that Ren BTC into anything you'd like. So you can convert it to WBTC, SBTC, you can leave it as Ren BTC, you can convert it to dollars, etc. Now, there are two main ways to get a yield on your Bitcoin, and those are providing liquidity and then also lending out your Bitcoin and then borrowing against it. So the main option for providing liquidity is actually through using Curve. So you can see here they have SBTC, which holds Ren BTC, TWBTC, and SBTC. Now they also have this Ren pool here, which just holds Ren BTC and WBTC. For me, I'd be a little more comfortable with that because I'm trying to avoid the synthetic assets like SBTC. I don't want something that's just meant to get price exposure to Bitcoin. I actually want the right to claim Bitcoin on the Bitcoin network later. So I'm going to show you how to get a higher yield than this, but with Curve, you can see with SBTC, you can earn between 1.74% and 4.35% per year. And with the Ren pool here, you can see you can earn between 2.16% and 5.4%. Now those variations come from if you're staking the Curve governance token, which would give you a boost on your yields. Now, Curve is the base of where you can get these yields, but there's actually a couple better ways to interact with Curve, which I've touched on before in this channel. So the first and simplest option here is Yearn Finance. Basically what Yearn does is it compounds the rewards you receive on Curve and then compounds that back into your principal position. So you'll be stacking Bitcoin in this case as opposed to receiving Curve governance token rewards. So right at the bottom here, you can see there's that Curve SBTC pool, which holds Ren BTC, WBTC, and Synthetics BTC. And you can see here at the bottom, there's also just Curve Ren BTC, which holds Ren BTC and WBTC. It's worth noting that with all of these Curve pools, if you deposit, say, Ren BTC, you're actually getting a share of the entire pool, not just Ren BTC. So if it's a Ren BTC WBTC pair, you're basically going to own a 50-50 share of both of those tokens. So Yearn is a great option, but one thing I've actually talked a little bit about on this channel before is Convex. So if you're not familiar with Convex, definitely click the link in the top right to see a breakdown of how that works. I covered it pretty in depth. But essentially Curve is somewhat similar to Yearn in that it's a building block on top of the Curve protocol. What Convex does, which is pretty unique, is that it allows you to get that boost we were talking about with the Curve governance token automatically without doing anything yourself. It does this by incentivizing other users to deposit the Curve token to get you that boost. But again, watch the full breakdown video if you want to learn how that works. So although Convex is a bit newer, this is probably the option I'd recommend for most folks. You can see here the Ren Curve pool is earning about 7.38%, which is pretty much the best I could find on DeFi in a reliable platform. You can see the projected APR there is actually a bit higher at 11.9%, which should turn on next week, so we'll see how that turns out. Now, if we hover over the APR, we can actually see the breakdown of where this return comes from. This is just always good practice to look at so that you know how the protocol is actually earning you a yield. So with this Ren pool, you can see that the base Curve APR is 0.36%. That's what we saw on the Curve page. And you can see that Convex is actually able to use the Curve token to boost that and give you a 4.55% yield, which is a 2.5 times boost. In addition to that, the Convex protocol is going to give you the Convex governance token, which comes out to a current APR of 7%. Obviously, this all could change if the Convex token goes up or down in price, so something to keep in mind, and definitely do your research and check out that video on Convex. So you can see here I'm just on the claim tab now, and I'll scroll over to the Ren Curve pool. This is what you would do if you're claiming your rewards. But I just wanted to point this out because Convex is not actually identical to Yearn in that it doesn't compound your position for you. So what that means is if you just want to stack Bitcoin, you'll have to pull out your CRV and Convex rewards, and you'll have to sell those off to Bitcoin and then stake them again. Of course, you could also just keep your Curve and Convex rewards. That's totally up to you. But again, I would do some more research on both protocols to see if you believe in their future. So I think as far as providing liquidity, Convex is going to make the most sense for people. But I know I'm going to get a lot of questions about Badger. So before I get into the lending protocols, I did want to just touch on this very quickly. So Badger is essentially a project that is trying to bring Bitcoin onto Ethereum in any way possible. I'm not a huge fan of the project because you can see here they have a rebasing token called DIG. Now, rebasing tokens like DIG, I think, have been pretty ineffective so far that are just trying to alter the supply to change the price. So essentially, DIG's supply will contract or expand to try and peg DIG to Bitcoin. But if you look at the charts on CoinGecko, it has not been successful at all, and I would definitely steer clear of this token. Now, with that disclaimer said, you don't actually have to get involved with the DIG token if you don't want. If you like the Badger app, what you could do is you could actually deposit your Curve positions onto Badger and earn a bit higher of a yield. So Badger is essentially like a Yearn option for Curve. In that if you deposit the current Ren WBTC token here, you can see your rewards will be about 4.7 to 6.73%. And you can see that part of that comes from the Badger governance token Badger, and the other comes from the Curve LP fees and the Vault compounding. You can see there's a ton of TVL on Badger, about $500 million. So it's a very big project. I think I was just rubbed a bit the wrong way by their attempt at making DIG a thing. Frankly, these rebasing tokens I just don't think are going to happen. And if you look at the DIG chart on CoinGecko or something, you'll see it has done a very horrible job. So you can check out Badger, but again, just stay clear of DIG. So now that we've gotten those options out of the way, I do want to briefly touch on the lending and borrowing options. Now, the thing here is that a lot of people are frankly trying to get a yield on just Bitcoin. So for supplying Bitcoin itself, you're really not going to get a huge yield. I think this option is probably not the best for many people, but it is worth touching upon if you actually want to borrow against your Bitcoin. So just using Compound as an example, and I'm using this one because it's definitely one of the most established DeFi projects. I would say it's extremely secure as far as DeFi goes. But you can see here they give you the option to supply WBTC. But you can see that APY here they're paying you is not going to be huge. It's 0.22%. Again, this is really just because so many people are trying to lend out Bitcoin and get a yield on it. Now, the benefit here is if you deposit your Bitcoin, you can actually borrow against that. So with Compound as an example here, you could borrow any of these options against your Bitcoin as collateral. This is more for the experienced user because it's worth noting that you could get liquidated or partially liquidated if your collateral ratio becomes unhealthy. This would just be one option to keep your Bitcoin position as it is, but then to borrow stable coins or something against it so that you can interact on DeFi basically with a loan. Assuming that you can generate a high enough yield on your stable coins or whatever you borrow, this could be a good option for you. To that end, I will link in the top right a video I did on the top 10 ways to get a yield in DeFi on stablecoins. Now, I do feel it's important to mention there are a couple other options other than Compound. A huge one is Aave. So you can see here that Aave allows you to lend out WBTC, and you can see they're paying a very small APY again of 0.01%. Of course, again, you can borrow against that BTC, but I would shop around on these platforms like Compound and Aave just to see where you can borrow a reputable stablecoin the cheapest. Now, lastly, I do also want to mention Cream Finance because Cream allows you to lend just REN BTC on their platform. So you wouldn't have to convert your REN BTC to WBTC if you use that bridge. As of right now, it's harder to recommend Cream to borrow against your Bitcoin because if you look here, the borrow APYs are just much higher for USDT, USDC, and your other reputable stablecoins. Just to compare that to Compound, if we go back to Compound, you can see you can borrow USDC for a 3.42% APY. So definitely quite a bit cheaper to borrow on Compound. So that's all I have for you in this video. I think you're probably going to hear a lot about other ways to earn a yield on Bitcoin and DeFi, but I feel confident that these recommendations are really just the best when you consider the safety of the protocols I talked about and the yield you're getting. So if you're watching this video a bit later and you hear about a new project where you can earn a really high yield on Bitcoin, generally if it seems too good to be true, it probably is. So definitely dive a bit deeper in that. You could come to the innovation channel on Discord where we're happy to support you. Now that Discord channel has been a great community so far to talk about different strategies, so I'll link our Discord below. I do want to remind you to please like the video, it definitely helps me, and then subscribe and hit the notification bell if you want to see more content. Thank you all so much for watching, and I look forward to seeing you all in the next video.